I'm going to go ahead and start. I think we'll have a few people trickling in, chomping on their potato chips, but I do want to take a few minutes to introduce Mirza Baradaran because she's worth it. Mirza is the Robert Cotton Alston Associate Chair in Corporate Law at the University of Georgia. She currently also serves as the school's Associate Dean for Strategic Initiatives. But I want to talk about her banking stuff. I got to know Mirza through her work. I read How the Other Half Banks, and I thought, this has got to be a part of any conversation. This is central to any conversation about monetary design and the problems that it's meant to cure. It's fair to say that Mirza reframed the literature on banking. She pushed the reset button, I think, in a lot of ways, and I want to be very specific about that. Banking, as opposed to shadow banking, the scholarship on banking, as opposed to the scholarship on shadow banking, has generally been written by those who believe in it. It's a really interesting kind of historiography, that the believers wrote their own history. And so if you think about the canonical works of Rondo Cameron, Richard Timberlake, even more contentious contributions like those of Naomi Lamoureux, Charles Calomiris, Stephen Haber, in those works, banks figure as enormously valuable instruments of economic development, even if their origins are parochial, even if they have flaws, for example, instability. Against this background, Mirza Baradaran's work makes a striking break. And I want to be clear here, it's not that she doesn't believe in banks, quite. It's that she believes they're profoundly shaped by their own profit-driven logic. And that logic makes them increasingly ill-equipped to serve as much as half the American population. So as she put it in her first book, as she conceptualized it, a kind of social compact used to require banks to earn the privilege of money creation. You can hear shades of Morgan's argument here as well. Used to require banks to earn the privilege of money creation by including poorer Americans in their services, and that social compact, she wrote, has broken down. Given that failure, we're obligated to think beyond our current complacency about the way we organize credit and its allocation in modern America. It wasn't clear, at least to me, that Mirza could raise the stakes in her argument, but she did just that in her most recent book, The Color of Money, Black Banks and the Racial Wealth Gap. In The Color of Money, she explores the way white Americans parlayed black banking into a solution for black poverty and an engine for black economic development, thus denying white society's responsibility for both, all the while leaving in place barriers to black wealth that would handicap both black banks and their customer for decades, indeed to the present day. So the book is a prize-winning tour into the forces that configure modern capitalism. Mirza's scholarship has had enormous impact, in part because it succeeds in reaching three audiences. So I just want to mention those audiences because, as we know, as all of us here have dealt with, it's really hard to do money stuff in a way that's accessible, both for our own brains and those around us. But Mirza succeeds in reaching, I'd say, three different very important audiences. First, she has catalyzed legal scholars, mainly, but not solely in the fields of financial regulation, monetary reform, and poverty law, to attend to the crisis of credit that she flags. Second, her books accessibly explain enormously complicated issues, complete with their history, normative argument, and analysis to a lay audience. That audience is enormously important insofar as Mirza aims in significant part at the policymaking world and at their influence in that world. Popular understanding and attention to the problems of low income and non-discriminatory credit appear to have expanded already, judging by the profile of her work. And that brings me to the last audience that Mirza has. Policymakers and politicians are registering and responding to Mirza's arguments. We see that more and more every day, from the first work on postal banking and the Post Office's white paper that followed that, to legislative proposals made over the last several years for credit reform and banking reform. Indeed, Elizabeth Warren, who used to hang around here, has also been moving on related initiatives because of Mirza's influence. In short, Mehrsa moves us from thinking about banking to acting on reform, and to acting on reform by thinking about banking. She connects our work here to the world of social justice. In that way, she inspires us truly to make money a democratic medium. Mehrsa.
Thank you. That was very overly generous. I really appreciate it. So I want to talk about the racial wealth gap, and which is staggering. And I want to show the role of credit policies, economic theories, and banking regulation in creating and perpetuating it, and to explore why the racial wealth gap hasn't abated over time. To say that our public policy efforts to eradicate the wealth gap have been a total failure is an understatement. If we're going to talk about democracy, money, and banking markets, we need to consider how racism and racial exclusion expose the myths surrounding each. So I want to focus specifically on Black banks because that's what I wrote the book about, but also because this history sheds light on the relationships between markets and state power. In fact, it is the lies we tell about markets, I think, that present the biggest obstacle to closing the racial wealth gap and achieving economic justice. So I hardly need to preach to this choir about these myths, but I'll lay them out anyway. So one, that money, markets, and trade exist outside the realm of political power. Two, that inequality is a natural byproduct of market forces rather than being created by the state. And three, that people left outside of the structures of power can overcome these barriers through self-help institutions or sort of local grassroots efforts. So the promise of free market capitalism is that it does not discriminate. This goes from Marx to Adam Smith. Adam Smith to Marx. Free markets offer equal opportunity for all to trade and prosper based on one's skill and ability to produce. Yet history reveals that in fact markets do discriminate, or alternatively, that the American economy has never borne any resemblance to a free market. For most of our history, Blacks have been excluded from occupations, schools, neighborhoods, and trades, and their property was not protected by law. Money, likewise, is said to be apolitical. As Christine Desson explains in a beautiful conclusion to a game-changing book, Making Money, the revisionist history of money likened it to water, neutral and colorless, outside of the infrastructures of power. In fact, the color of money for much of US history was white. White, too, was the color of government credit. In each historical moment when wealth was created, whether through the Homestead Act or the FHA, mortgage credit, farm loans, Black communities were shut out of land and wealth accumulation. Moreover, at certain pivot points in history, specifically during Reconstruction and the Civil Rights era, and I'll talk about both, where Black communities were demanding state intervention and capital to remedy past injustice, the rhetoric of free market capitalism was used as a weapon. A self-help market of segregated banks and businesses were offered as a decoy for other potentially more direct avenues for inclusion in the economy. In other words, power brokers promised that the market would fix the problems created by law and backed by state violence. This last myth is not limited to racial exclusion, the one about small community banks. But using Black banks as a case study, I want to debunk what I think is this broad, stubborn, and long-standing myth that small community banking, cooperatives are the remedy to poverty specifically for marginalized communities. And I blame Thomas Jefferson for starting this myth and George Bailey for perpetuating it every single Christmas. And it's high time for a boycott of this movie. Who's in? Okay, great. Who but the absolutely heartless would criticize George Bailey's bank? George Bailey's bank is the Jeffersonian fantasy bank. During the founding, Hamilton pushed for a large, centralized, government-coordinated banking system. He believed that a national bank and a public credit system was not a mere matter of private property, but a political machine of the greatest importance to the state. Jefferson, on the other hand, believed that all federal power worked against the common man. He feared that powerful centralized banking would favor the elites. And this fear was valid. The law of capital is that it flows toward more capital. And the innate trajectory of any banking system left unregulated is toward growth and concentration, which in turn breeds power, which inevitably leads to concentrated wealth and inequality. Jefferson was, however, wrong in his solutions. He rejected federal banking and the federal credit system altogether. Still, his ideas were very persuasive. Limits on bank size and reach, like unit banking, were the norm through US history. Jeffersonianism still carries the day when it comes to solutions for poverty. So even as the Federal Reserve and Wall Street have reached a size that Jefferson could not have fathomed in his worst nightmares, we still pretend that local and small necessarily means egalitarian and accessible. And here comes George Bailey. The idea is that a group of poor people, and imagine them as farmers, widows, and coal miners, living in a free market economy, will pool their resources together, lend to each other, and collectively lift themselves out of poverty. And this idea has seduced not just the right, but also the left, or maybe more so the left, who both seem to pine for the noble Main Street community banker who made America great. The left focuses on the nobility of George Bailey, who has ideals besides profit, and the right focuses on how cheap and easy a solution this is to inequality. You can be the change you want to see without having to actually change anything. Neoliberal reforms created mammoth banks, all underwritten by federal subsidies, and for those left behind, offered a sort of hodgepodge of microcredit fantasies and incentives for entrepreneurs who do good while doing well. So while JP Morgan gets, according to Morgan Ricks, $900 million a year in interest on their excess reserves, they're celebrated for helping indigenous women set up a lending circle somewhere in Bangladesh. And before you blame me for being too cynical, let me assure you that I spent a summer in college organizing microcredit in Cusco, Peru. It's too bad there's no pictures of that. Then I closely observed how the New York Fed created the Maiden Lane SPV and used trillions of dollars of money created out of thin air to buy up Wall Street's toxic mortgage-backed securities and the derivatives accompanying them, making their creditors whole, which was nothing like a lending circle. It's not an exaggeration to say that the history of community empowerment in one form or the theory of community empowerment in one form or another has been the foundational theory of every act of banking legislation over the past 50 years aimed at financial inclusion, inequality, or addressing the historic racial exclusions in credit and banking services. And I'll go through that history in a second. These solutions are ineffective, but so clouded in goodwill that they're practically impossible to oppose. And let me be very clear, I have nothing against the mythical George Bailey. In fact, I cry every single year when the humble citizens come to the rescue of this bank. So boycott starts next year. Black banks especially have been the heart of their communities. Many black banks were founded by preachers, community leaders, and leaders of the civil rights movement. So just across town, I don't know Boston well, Boston's first black bank was Unity Bank and was created in 1968. And its founders called it the bank with a purpose and explained to the Harvard Crimson that they intended to have a quasi-crusading role. For the communities that they serve, black banks have been much bigger than their balance sheets and have served as a shield against economic exploitation. These banks have often had a quasi-crusading role. They were symbols and sites of community boycott and protest. They have stepped into the void of Jim Crow and segregation to offer services amidst banking exclusion. In 2016, this movement revived on the heels of the Black Lives Matter movement with a hashtag #BankBlack push as another means of protest. Killer Mike, who was linked with this movement, explains that his motivation was to take his money out of the dogs' hands until they can better represent the population. But as community-oriented, skilled, and celebrated as these banks and bankers were, they could not build wealth, nor could they take the money out of the dog's hand, because they could not overcome the money-sucking centripetal pull of the dominant banking market. The same forces that created the need for these banks, so financial disenfranchisement, segregation, and poverty, were the very forces that impeded their ability to grow wealth. So racism and housing segregation presented tangible and observable economic effects on the black population that you can see on these bank balance sheets. Yet the segregated banking industry and the self-help rhetoric around it has been advocated by both reform-minded policymakers and cynical ones. Obviously, the cynical ones are more of a problem. So in the quick history that follows, and I'm going to cover a lot of ground, I hope to demonstrate the following: that insofar as the levers of power were held by whites and the economy was based on racial subordination, markets would perpetually block black capital accumulation. So let's start with the economy of slavery. Slaves were assets, credit, debt, and currency. Their bodies were akin to capital and wealth. Between 1820 and the Civil War, black banks across the South issued notes with images of slaves printed on the money. And Sven Becker, Seth Rockman have done excellent work here showing that slaves were not just the generators of cotton production, but they were collateral used to finance the institution. Slavery modernized credit markets, creating complex new forms of financial instruments and trade networks through which slaves could be mortgaged, exchanged, and used as leverage to purchase more slaves. Americans and the British built fortunes on slavery and defended the institution with law and violence. Without getting their hands dirty, the British developed the common law on contracts to protect their overseas investments. In the end, the Union won the Civil War thanks to Grant and Sherman, but also thanks to Lincoln's greenbacks and the Supreme Court's decisions to uphold the legal tender cases and the issuing of fiat currency. Greenbacks bankrupted the South, the Southern banking system that was issuing their own currency, and allowed the Union troops to buy provisions. As Keynes says of legal tender, the state claimed the right not only to enforce the dictionary, but to write it, in this case with new money. During Reconstruction, the freedmen were expected to make the transition from being capital to being capitalists. Freedmen and their abolitionist allies demanded land as a form of reparations and as a punishment for the treasonous Confederates. Without land, freedom and justice, they said, and was true, would be meaningless, and participation in capitalism would be a farce. President Andrew Johnson vetoed the land grant and the Freedmen's Bill, except one provision, which I'll get to in a second. He reasoned that the freedmen would be protected by the free market. This is actually true in his veto. You should really read it. They would be protected by the free market and contract law, that they would bargain for fair wages and buy their own land. So this was unbelievably naive or incredibly cynical. The Southern economy was nothing like a free market. Whites refused to sell to blacks. Southern legislatures, lawyers, and judges drafted laws governing every aspect of black labor, and they restricted blacks from skilled trades. Vagrancy laws were prevalent. Wages were capped by law and by cabal between employers, and violations led to convict labor without due process. By the end of the Reconstruction era, most freedmen were landless, voteless, and with practically every profession blocked to them. Their only choice was to grow cotton. Of course, that was the whole point. The world cotton markets were heavily dependent on cheap and abundant cotton from the United States. And in order to have enough cotton exports, the freedmen had to grow it. And for that to happen, they could not be landowners. America could not go the way of Haiti. That was the threat. Where after independence, the former slaves refused to grow sugar, the slave crop, and output halted. They grew crops they could eat instead. There was every reason to believe that freed American slaves would also go this route. In the meantime, the federal government was actively providing free land to private railroads for expansion and to white men continually through the Homestead Acts. Blacks were denied land not because the government was constrained by laissez-faire, but because, as Andrew Johnson explained, America was and should remain a white man's government. This white man's government had control over capital and land because it had control over lawmaking, enforced, of course, by their monopoly on violence. But instead of getting land, the freed slaves got a bank. In 1865, Union General Oliver Otis Howard explained that a bank was better than land because it would teach the freedmen thrift and savings. Freedmen, he said, and I quote, should earn land and not receive it as a gift. So was the Freedmen's Bank and he was a Union general, right? So was the Freedmen Savings Bank justified by reformers and obviously Johnson. The Freedmen's Savings Bank was one of the only tangible creations of the Reconstruction era Freedmen's Bill. No bank before or since has resembled the Freedmen's Bank. It was created by Congress, signed into law by Lincoln with a special charter. I mean, the Federal Reserve was still decades away. We just barely had a currency. The bank was immediately successful, and it was embraced by the freed slaves. And the main reason they trusted the bank with their money is that they thought that it had the backing of the federal government. Why did they think this? Because the bills and the notes had the building, and the building itself had government insignia all over them. These notes seemed to be backed by the Treasury. And bank managers did nothing to go counter this image, and they plastered the government insignia all over the building. And the mission of the bank, according to the congressional charter, was to safeguard the deposits of the free slaves. It was likened to the savings banks that were popular in that era. It was not a commercial bank. No loans were given of any kind. It was a glorified piggy bank. For a decade, the bank also disseminated propaganda throughout the South, advertising a savings account as the best way of getting land. Responsible, and the data shows that that's actually how it was used to save up for land. The capital of the bank grew to what today would be about $1.5 billion, too much money for the white manager to resist. The bank president was Henry Cook, who was brother of infamous Wall Street speculator Jay Cook, and he took the deposits to speculate, to make personal profit, on railroad bonds. And when the bank failed in 1874, depositors lost about half their deposits. And the significance of this failure reverberated and lingered in the community in very interesting ways. Black leaders and black bankers for almost a century repeated the assertion that the bank had caused the black community to not only trust white banks, but also their own banking sector. I actually began this project because I was reviewing the FDIC data on the unbanked, and I was struck by the staggering racial differentials of the unbanked in the South. Blacks are 60% unbanked or underbanked, compared to like 10 or 13% for whites. And the number one reason stated was distrust of the banking sector. And as I started conducting interviews, the Freedmen's Bank came up. This is in 2014. W.E. Du Bois says of the failure, "Not even 10 additional years of slavery could have done so much to throttle the thrift of the freedmen as the mismanagement and bankruptcy of the Freedmen's Bank chartered by the nation for their special aid." Some believe that they were purposefully defrauded by Congress. In fact, Congress wasn't paying attention, and neither was the board of directors, which were filled with philanthropists like John Jay and Thomas Webster. But Cook and his colleagues had violated the law and the charter, and no one was prosecuted. Henry Cook's defense, when he was asked by Congress, was that he was a mere victim of the crisis. So the market stole the money. By the time the Freedmen's Bank failed, disenfranchisement of the black population was complete, and the rights written into the 13th to 15th Amendment were nullified by legislatures, courts, police power, and paramilitary-style violence by the Klan. In a series of decisions between 1873 and 1898, the Supreme Court weakened the rights of black citizens, blessed Jim Crow and disenfranchisement. In the chief judge, when outlining the Civil Rights Act of 1875, said that it's been 20 years since slavery. It was time for the slaves to stand on their own 2 feet and stop being, and I quote, "the special favorite of the law." In fact, for the next century, the 14th Amendment came up more to defend corporations against state overreach than it did black men and women against the hostile arm of the state. The state used its power to uphold property rights and corporations, their special favorite, rather than the rights of black citizens. The myths used to justify these decisions bear spelling out, because it was a pervasive, and not just by white lawmakers, but black leaders as well, like Booker T. Washington, who happened to be the leader that white industrialists like Rockefeller and Carnegie kept funding. Washington was influenced by the gospel of prosperity and said that blacks would achieve wealth through hard work and thrift, and that wealth would lead to respect, which would lead to integration and then political power. And history showed the opposite, that once blacks accrued wealth, white resentment would often lead to violence. So the Tulsa riot is one dramatic example. So after the Freedmen's Bank, black banks formed in response to Jim Crow in the South. Many were inspired by Washington's rhetoric, but most were born out of necessity. So these banks were oriented towards self-help and community building. They were linked with a church, a fraternal society, a secret society, and insurance and banking were usually part and parcel of the system. One of these banks was Maggie Walker, St. Luke's Bank. She was the first woman of any race to start a bank, first black banker to be inducted into the Virginia Bankers Association. Her bank was one of the handful of black banks that survives the Great Depression, and she saves several other banks by merging them into hers. So I'm going to pause and let you enjoy this good story before I go on to the rest. I'm not close to finishing, though. Okay, so there won't be very many more good stories, sorry. By 1910, the Great Migration north is met with segregation, which leads to concentrated black populations in northern cities, which of course leads to a demand for more banks. So this was the heyday of black banking, where 130 of these banks are formed, and they're in most of the northern cities in segregated economies. If segregated banking was ever going to work, it was during the Roaring '20s when segregation was almost complete. However, these banks were not able to create wealth. They couldn't even keep the wealth in their communities. One is their deposits. Their deposits were small and volatile because of the concentrated poverty of the black population. Small and volatile deposits lead to high operating costs and a lowered ability to lend because banks had to offset the risk by holding safer assets, meaning more capital and more reserves. Their assets were on home mortgages in segregated neighborhoods that even in the Roaring '20s could not retain value. The first black family to move into a white neighborhood paid a premium for purchase. Once a neighborhood tipped into a black neighborhood, and this only took 5 to 10% of black families moving in, white flight led to a free fall in property values. This unfortunately, lack of ability to retain property value is still the case. So these signs were not just motivated by racism, but also to protect home equity, which was also based on racism. So same with racial covenants, HOA associations, and sometimes bonds. Moreover, these banks could not participate in the money multiplying magic of growing wealth in black communities. Because though you can segregate people, you can't segregate money. So these banks acted as a sieve with money leaking out of the community with every lending transaction. I'll just show real quick. So this is the simple, those of you who understand banking are going to think this is overly simplistic, and those who maybe are new to banking are going to think this is too complicated. So I shouldn't be doing this. But this is the basic money multiplier, that says this is how banks create money. So having the money multiplier here, so a black bank could get deposits from a black customer, lend to a black borrower, but as soon as she paid for the house, it would leak out into the financial system. And black bankers were constantly frustrated by this sieve-like quality. And white banks weren't lending back into the community. Chase Manhattan Bank had several locations in Harlem where they were happily taking deposits, but these branches did not offer any loans. They took deposits from Harlem and made loans downtown. One bank manager explained in his PhD dissertation that I found, explaining this very matter-of-factly, and he says that it was too risky to lend because blacks were not really good businessmen. George Bernard Shaw reveals the backwards logic here. The haughty American nation, he says, makes the Negro clean its boots and then proves the moral and physical inferiority of the Negro by the fact that he is a shoeblack. Oddly, Harlem was the only place where a large black population did not have a bank at all during this time. And the reason I suspect, and I think I support this theory in the book, has to do with the state banking regulator. It's very discretionary to offer a charter there, and they were very cozy with Chase Manhattan, who was quite enjoying their monopoly on deposits uptown. As James Baldwin says, white is a metaphor for power, and that is a way of describing Chase Manhattan Bank. I found this quote after I had already finished the book, and I think I need to write another book just to start with this quote, because it's brilliant. Meanwhile, in Chicago, Binga's Bank was the largest and most successful commercial bank during this era and was the most profitable of the black banks. He bought a house in a nice neighborhood, incidentally, and it was bombed 7 times, and he kept moving back in. Binga had joined a Chicago clearinghouse, which is where good banks went before there was FDIC insurance. The point of these clearinghouses was to protect all the member banks during a liquidity crisis. This clearinghouse refused to help Binga's bank. If we understand trust to be the basis of sound banking, then racism threats the very viability of black banks. They did not trust his bank, which they used actually racial expletives to describe. All the other members of the clearinghouse survived. So racism also had a tangible effect on his mortgage, on his asset sort of portfolio. Binga explained that he selected the best of his mortgages, and he couldn't sell them even for a haircut of 50%. So his bank is liquidated. This is during the Great Depression, so lots of banks fails. And that's not even the worst of it. As far as I can tell, very few banks, some sources say no bankers went to prison after the Great Depression for their failure of banks. If someone can find this source, I've dug around. Some say no bankers went to jail. Binga did go to jail. The state brings criminal penalties against Binga for violating state banking law. He goes to prison for 10 years until he's exonerated from the trumped-up charges by Clarence Darrow himself. So Binga's wealth did not lead to political power or equality. The truth was that absolute equality before the law had to come first. So what happens during the New Deal makes this quite explicit. Roosevelt restructures the US banking and credit markets through heavy state intervention. Between 1933 and 1970, hundreds of thousands of small community banks, credit unions, thrifts, and ILCs are formed. They're safe, stable, and profitable. And the reason these small banks are thriving is because the New Deal essentially takes the risk out of banking, or bank lending. So deposits are insured by the FDIC, and loans are subsidized by the FHA, the GI Bill, farm loan programs, and Fannie Mae. As Perry Merling has said, in effect, the effect of this is if the government said you were solvent, then you were, because the government would stand behind you and prop you up. So the government made these banks solvent. There was no historic past of credit unions until credit unions became solvent. All of this built the middle class and created intergenerational wealth through home ownership and low-cost higher ed, which, again, made America great. In return, banks are heavily regulated with interest rate caps, geographic restrictions, activity restrictions, capital controls. For a while, the only competition allowed between banks is who can offer the best toaster. So the mythical Bailey's Bank in 1945 was not actually taking money from the nice residents of Bedford Falls and investing it in homes. It was doing that, right? But all the home mortgages that thrifts lent were FHA mortgages, just like Potter's Bank. So this was Jeffersonian ends through Hamiltonian means. Local and small banks made possible through large federal credit programs. In other words, public policy protected banks and kept them small because that is the banking sector that Roosevelt and his Congress decided that they wanted. The very idea of capitalism was under threat before the New Deal. In his inaugural address, Roosevelt claimed that no less than the future of essential democracy depended on getting these reforms right. So the New Deal responded with a Keynesian program that was as close to state planning or democratic socialism as the US ever came. Afterwards, with businesses and banks moving, we go back to telling stories about the triumphs of the free market. This wasn't the only irony. From Jefferson to Wilson, from the Constitution to the New Deal, progressive reformists fought big money power for the sake of the people, and their reforms were built on a bedrock of white supremacy. So Wilson's progressive reforms broke up monopolies, gave unions collective bargaining power, established the FTC, set up the farm loan banks, established the Federal Reserve to break up the monopolies of credit that hinder the true liberties of men, and he institutionalized Jim Crow in the federal government. He screened Birth of a Nation in the White House, which is the movie that lionized the Klan. It was Southern Democrats in the Senate that pushed FDR's New Deal, the same Southern bloc that made sure that no anti-lynching bill reached the floor despite 240 attempts. So the New Deal built the lily-white suburb of homeowners and the segregated black ghetto through redlining. And I'm going to use the word ghetto because it's more accurate. Black community assumes, which is the term mostly used, assumes that geographic segregation was voluntary. The HOLC appraisers used census data and elaborate questionnaires to predict the likelihood of property association in neighborhoods across the country. So these maps had 4 categories based on perceived risk. So A was green, no risk, down to red, highly risky. Green being the most desirable, red being the least. And in making these judgments about a home's potential to appreciate, these HOLC mapmakers, like individual appraisers before them, used race as the #1 indicator of risk and desirability. So green neighborhoods were homogeneous and white. At the other end, red neighborhoods were predominantly black or racially inharmonious. So this is one form in Atlanta. This is called, as you can see, the Best Negro section in Atlanta. And if you look at that top line, it measures percentage of Negroes. So it says this is businessmen right next to Spelman and Morehouse, the 2 black colleges. And the top line is percentage of Negroes and then percentage of foreign-born and then infiltration of those races. That was the method used to determine race. So FHA bureaucrats actually advised developers to include racial covenants and for realtors not to show blacks homes in white neighborhoods because they would lose their FHA financing. The FHA maps were essentially geographic risk management. They cordoned off risks of concentrated poverty in the black ghetto and created Jim Crow credit markets, essentially. So as the white American economy grew by leaps and bounds, the segregated black economy became locked in a state of perpetual depression due to exclusion and exploitation. So on top of the FHA mortgages, a dual market in consumer credit was also created during this time. The FHA had a consumer credit guarantee, but it was short-lived but around long enough to create a secondary market in consumer credit. So in the suburbs, department stores began offering credit cards with a revolving credit line. And this type of credit was flexible, it was low interest. In the black ghetto, there was only installment credit. Consumers with little wealth bought most necessities, including medical care and appliances, on installment credit. And the way that these contracts were structured was that the goods purchased were bundled together, and each payment went to pay off a slice of the total interest and principal. So if a few payments were missed, the borrower was deemed to be in default of the entire bundle of goods. And this was done through contract law and enforced by the law. So defaults involved repo men, criminal penalties, sometimes threats of bodily injury from the shadier installment creditors. Much different than revolving credit. Because of the high cost of credit, ghetto residents were paying 3 to 5 times more for lower quality goods and services. So before there was a Montgomery bus boycott, there were boycotts and protests of these installment credit arrangements. In Harlem, the boycotts were even sanctioned by the courts. And a few community groups teamed up with state legislatures to push these reforms. In Anne Fleming's new book, City of Debtors, she talks about activists, lawyers, and judges who use the unconscionability doctrine in contract to invalidate these contracts. And this movement hit, unfortunately, against a wall of market fundamentalism and the sanctity of contract in the 1970s. So in the meantime, the civil rights movement picks up heat. And with it, the establishment of a new sort of movement for credit. The leaders of the movement, both the integrationists and the nationalists, saw economic rights going hand in hand with civil rights. So Malcolm X saw the ghetto economy as white exploitation, akin to colonialism abroad. Black nationalists expressed solidarity with global anti-colonization movements and demanded sovereignty. Right? So why should the white people be running the banks in our community? Malcolm X said, and I quote, "A revolution is based on land. A revolutionary wants land so he can set up his own nation, an independent nation." Martin Luther King was the opposite, right? He's an integrationist. Not the opposite. They shared a lot in common. Before Martin Luther King became a national figure, he was on the board of a black bank. And in laying out the movement's future in 1956, he had 6 goals for the movement. Number 1, he said, was to establish a black bank in Montgomery because white banks were not lending to blacks. 2, it was to organize a credit union. He says, we're anxious to demonstrate that cooperation rather than competition is the way to solve our problems. Later down the list was voting. If you listen to the momentous I Have a Dream speech, I was going to show it, but I saved time. I have a dream speech from a banking experience. You can see the king is asking for redress. I'll just read it. In a sense, he says, we've come to our nation's capital to cash a check. When the architects of our republic wrote the magnificent words of the Constitution and the Declaration of Independence, they were signing a promissory note to which every American was to fall heir. This note was a promise that all men, yes, black men as well as white men, would be guaranteed the unalienable rights of life, liberty, and the pursuit of happiness. It is obvious today that America has defaulted on this promissory note insofar as her citizens of color are concerned. Instead of honoring this sacred obligation, America has given the Negro people a bad check, a check which has come back marked insufficient funds. But we refuse to believe that the Bank of Justice is bankrupt. We refuse to believe that there are insufficient funds in the great vaults of opportunity of this nation. And so we've come to cash this check, a check that will give upon demand the rights, riches of freedom, and the security of justice. King, who chose his words carefully, was not advocating colorblindness or to be judged by the content of one's character, not the color of one's skin. He was asking for that. But he was also asking for a remedy for past injustice in economic terms. He was explicit about this later. But by then, he was too unpopular and radical for anyone to listen to. King said, and this is a quote, "The underlying purpose of segregation was to oppress and exploit the segregated, not simply to keep them apart. He said the basic purpose of segregation was to perpetuate injustice and inequality. In other words, the state created inequality. Segregation had nothing to do with free markets, and neither did poverty." His last speech before his death, he proposes a bank-in movement coupled with collective action in Memphis. His last movement was akin to a populist movement of the past. It was a poor people's movement, like the past sort of populist revolutions. Everything changes between 1965 and 1968. The Civil Rights Law, the Voting Rights Law, Brown versus Board of Ed, Montgomery bus boycott, Selma March, all of those happened before 1965. The national appetite for civil rights reform shifted so much that by 1966, Roger Wilkins of the NAACP says, it would have been hard to pass the Emancipation Proclamation in the atmosphere prevailing now. By 1969, Malcolm X, King, John F. Kennedy, Robert Kennedy had all been killed. Johnson's out of office, or announcing that he will be. And the consensus of the black community toward the civil rights movement, if there was one, was that it had failed, at least it was incomplete. Yes, the whites-only signs were now gone, but joblessness, dilapidated housing, and intractable poverty were not. The Federal Reserve studied inequality in 1967 and found that blacks had 1/5 the wealth of whites, and half of black children grew up in deep poverty compared to 9% of white children. So black protests turns to a resistant movement, and black ghettos across the country erupt in violence. To many, it felt like a domestic war. CBS called it a rebellion. It says, this is not a riot, it was an insurrection against all authority. So there's several commissions to study these riots. The Kerner Commission is the most famous one, and it comes out the last year in the Johnson presidency, and it's scathing. It says, what white America has never fully understood, but what the Negro can never forget, is that white society is deeply implicated in the ghetto. White institutions created it, white institutions maintain it, and white society condones it. There were also 2 hearings conducted by the Senate Banking Committee, chaired by Senator Proxmire, with studies presented by the FTC. And the FTC finds that blacks living in the ghetto are paying more for everything than in the suburbs. And there's 3 conclusions specifically that this hearing finds. One is that the rioters are targeting lenders and saying things like, burn the books. These lenders were the symbols of white oppression in the ghetto. 2, that these rioters, and this is the one everyone sort of hangs their hat on, that these rioters are leaving black lenders and black businesses alone, as Senator Javits calls them, soul brother establishments were not targeted. And 3, and this is the one that is supported by both studies but ignored by everyone else, is that these lenders aren't making a profit. They just operate in a different lending market. Okay? As Louis Hyman shows in his excellent work, 94% of the difference in cost between installment credit and revolving credit had to do with increased risks and default. So Proxmire's big push is to create a credit unions in the ghetto. Proxmire was a very enlightened Jeffersonian. He believed in the public duties of banks, but he was obsessed with small business, credit unions, local banks, George Bailey, I guess, against federal spending. So he would pass the Community Reinvestment Act a few years later to force white banks to lend into the red line areas. These programs, though, ignored the main finding, which is the market needed to be changed. But this was one among many proposals that the 1968 election brought to the fore. So Robert Kennedy, Humphrey, Nelson Rockefeller all had programs, including extending the Great Society programs. Romney, who was a candidate until he made a big gaffe, described the white suburbs as a high-income white noose around the black inner city. And he said it was the government's job to fix it. So Nixon is the winning candidate, and he decides to use white backlash to civil rights as his coalition-building platform. In 1968, Nixon couldn't explain, like Andrew Johnson had done, that this is a white man's government. He had to be more subtle. But his top aide, L. Rickman, admits there was a subliminal anti-black message to all of his advertisements and speeches. So his campaign issued these fear-stoking images of rioting, and with a voiceover that says, "We shall have law and order in the United States." To defeat economic reforms that were being advocated by black activists, other Democrats, and a wing of his own party, he used black capitalism. And this is the part of the Southern strategy that I think has been forgotten, and I try to cover it in my book. So Nixon co-opts the language of the Black Power movement. Black capitalism is so vague that it appeals to everybody. To blacks, it seemed like it would be a grant to power. So Nixon says blacks in the ghetto have to have more than equal chance, they would get a dividend. Okay? To suburban whites, it would cure violence. He said people who own their homes don't burn them. To middle-class voters who loved George Bailey, any program using the words entrepreneurship and self-help struck a chord. To fiscal hawks, it would cost nothing. He said, instead of government jobs and government housing and government welfare, let government, the greatest engine of progress ever developed in the history of man, use American private enterprise. This is his platform. It's Black Capitalism. I won't play the ad, although it's very interesting. I want to focus here. So this is his ad. Basically, we will have integration later. This last line, he says, it's time to move past the old civil rights and to bridge the gap between freedom and dignity, between promise and fulfillment. I looked in the Nixon archives of the first 5 drafts of this, and at first it said, forget civil rights. Okay, and then someone crossed it out and they were like, move beyond. And then it became, move past the old civil rights. But the message was the same. He put it actually bluntly in another talk to the Senate Republicans where he says, if he gets elected, I'm gonna lay off the pro-Negro crowd. So in order to see how great a political diversion this was, you have to look at the paths not taken. So going into 1968, the reform paths were clear, right? Either integration or reparations, both of which are being actively pursued. Integration was pushed forward by MLK Coalition, the Kerner Commission, Johnson, Romney, and Romney's wing of the GOP. And the logic, as James Baldwin explains, sorry, there's so many Baldwin quotes, but I just wish I was more of a Baldwin writer. So he says that a ghetto can be improved in one way only, out of existence. And that's what Johnson was trying to do with the FHA, Fair Housing Act, unlike the other one. He pushed through Congress the Fair Housing Act just 4 days after MLK is killed. He sort of takes a stunned nation and gets his bill through, and he says it's the most important bill. He passed, the law says that the government, the HUD should affirmatively further fair housing, which was understood to mean integration programs. So Nixon appoints Romney as his HUD secretary, and Romney is the only member of Nixon's cabinet interested in pushing forward on civil rights instead of pulling back. So Times column describes Nixon's cabinet as George Romney and 11 fellows named Clyde. A black activist called it Uncle Strom's cabinet. So Romney pushed hard for integration, and Nixon fights him every step of the way. He tries to send him to Mexico, and Romney writes him this note with this line underlined. He says, the poor cannot continue to be isolated in the deteriorating core cities without broad-scale revolution. He underlines it, and as if Nixon cares about the logic of integration. So he shuts him out of the administration in 1972, sends him away. The other option was reparations, and demands for reparations were not just provocations by radical groups like the Black Panthers. There was actually one program that got to Congress and got proposed. It was bipartisan. It was the core plan by Roy Innis and Floyd McKissick. It involved Treasury financing and a large-scale capital program. Nixon met with Roy Innis and Floyd McKissick, but refused to talk to them after getting elected, even though he starts to co-opt their language. So no reparations, no integration, Black capitalism instead. Just like Andrew Johnson during Reconstruction, no land, but how about some deposits? So with much fanfare, Nixon deposits millions of dollars of treasury accounts into Black banks to aid them. As you all understand, deposits are not the same thing as capital. In fact, quite the opposite. Unity Bank across town said that they got deposits from the post office, which were small. They had to go pick them up every day. It cost them more to get these deposits than it was worth, so they stopped getting them. He also creates the Office of Minority Business Enterprise, the OMBE, which cannibalizes the budget of Johnson's poverty programs. So this was, as Humphrey says during the campaign, talking about Black capitalism without capital is just kiting political checks. You can't have capitalism without capital, but this was exactly the plan. No capital, just deposits. When a Black official at the OMBE actually tried to put forward a plan costing $8.6 billion, one of Nixon's Commerce Secretary, Maurice Stans, who was one of the Clydes, shut it down. In a memo to the OMBE, and I can't believe they wrote this stuff down, Stans says that the most important objective, I'm quoting, was to create success stories, which would create pride among the minority. What the Black people, the minority people need more than anything else, emphasis mine, today is a modern Horatio Alger. So another piece of the Nixon's program was affirmative action, which nobody lobbied for. It was a weak compromise. So Nixon asked his SBA to ask corporations to voluntarily hire more Black employees and to set aside some contracts for Black businesses. But this program obviously garnered a lot of hostility because it cost more to whites. Soon, any affirmative action program was called reverse discrimination and cut down. Actually, many opposed them using Martin Luther King's own words, content of character. As Justice Roberts said in advocating in 2014, in advocating colorblind laws, he said, the way to stop discrimination on the basis of race is to stop discrimination on the basis of race. So Black capitalism was anemic and utterly unresponsive to the needs of the Black community, but it was a very clever decoy. This was Nixon's détente on race. He took the sting out of the Black radicals' demands for Black power, jettisoned Johnson's anti-poverty program, maintained his opposition to integration, and even won the support of a few Black leaders. So checkmate. Incidentally, a Black leader that was not on the hoax was Andrew Brimmer, who was born to a family of sharecroppers and received a PhD in economics from Harvard. He was Johnson's appointment for the Federal Reserve governor, first Black governor of the Federal Reserve. And he denounced capitalism. He says, this doesn't work, it's a cruel hoax. You cannot have capitalism without capital. So I want to pause here to consider the coincidence that it was this exact moment when the neoliberal ideas of limited government and market fundamentalism went viral, so to speak, and broke out of the academy and into politics. In fact, the most potent weapon against the demand for capital was capitalism. As soon as the Black community began asking for a share of wealth created by New Deal Keynesianism, the response was hardcore capitalism with a libertarian edge. So Alan Greenspan serves as Nixon's economic advisor before the campaign. He writes him a memo in 1967 on the urban riots. He calls the protests an attack on America's system of free enterprise and individual rights. He says, the critical question is whether the Negroes are correct in claiming they have been exploited. His answer, no. The charge of exploitation in the sense of value being extracted from the Negroes without their consent for the profit of the whites is clearly false. This distinction between discrimination and exploitation is all the difference in the world. He said that the higher prices were justified by the laws of supply and demand, they were higher risk, and therefore it was erroneous to claim exploitation. So he suggests, and this is where Nixon gets his black capitalism program, is from Alan Greenspan. He suggests that Nixon should help the Negroes help themselves, and any capitulation to their demands for integration or reparations was anti-capitalist and an attack on free enterprise. Milton Friedman even claimed that basic civil rights anti-discrimination laws were anti-capitalist, and an interference, this is a quote, with the freedom of individuals to enter into voluntary contracts. He compared the civil rights laws with the Nuremberg codes. It was all unjustified government intervention. It was oppressive. Friedman said that the markets would naturally root out discrimination because anyone who opposed buying goods from black businessmen or employing black employees was being inefficient and would pay a higher price for that prejudice. Theoretically, this was true, but historically, it was not. Whites did not pay a higher cost for racism, quite the opposite. It was the black ghetto that bore the cost. The reality was that the ghetto was the only place on the map where the full price of credit was being paid to loan sharks who couldn't reduce the risk of default by selling off their loans to the secondary market. Everywhere else were subsidies, federal insurance, secondary markets. And this had nothing to do with capitalism. For Jim Crow in the South and segregation in the North were all heavy state interventions. You'd think Friedman and his Chicago economics department would have been on the front lines of the civil rights movement to deregulate the state, get rid of Jim Crow. That's not what happened. So Friedman and Greenspan, like Ayn Rand, were not describing the world as it was or had been, but fantasizing an imaginary one. As Quinn Slobodkin explains in his excellent new book, this was the mission of Hayek and the Montpelier Society as well, and they also used the rhetoric of neoliberal free market capitalism to oppose South African rights for land. So these theories were elegant and often assumed perfect information and rational behavior. They were aspirational faith, but not accurate descriptions of the real world. You could be forgiven for thinking this ideological movement was a direct response to the economic demands of the black activists. Lee Atwater's famous quote, he talks about first you're saying racial expletives, and then you're talking about tax cuts. You're opposing black claims using economic terms. That was his famous deathbed confession, but there were other links as well. The John Birch Society starts alongside the Goldwater movement, and it's an example of an early alliance between the Wallace segregationists and the libertarians. Another link was John Olin, who began to funnel money toward libertarian organizations, including his own Olin Foundation, the Federalist Society, and the Law and Econ movement. He was radicalized, if you will, after witnessing the 1969 takeover at the Cornell campus by Black Power groups during Alumni Weekend. Olin also funded Charles Murray's research, which produced several tracts on, genetic racial inferiority, including the bell curve. And speaking of pseudoscience, each era has its dogma justifying racial inequality and oppression. In the antebellum era, Christian doctrine was corrupted to hold that white men had a divine right, even duty, some said, to subjugate and enslave blacks. When religious theory fell out of favor, it was natural selection. So social Darwinists made spiffy-looking pseudoscientific charts of racial progress using skull measurements. Colonialism abroad and racial inequality at home were justified as just the laws of nature. After those theories were discredited by being put into practice by the Nazis, that theory was unpopular. And so the laws of the market, I think, came to replace the laws of nature and of God. Economic theory and the law of supply and demand were the reason black labor was undervalued and credit cost more. Any effort to change this market was harmful government interference with what Reagan called the magic of the marketplace. And just as God's will was difficult to challenge in the 1800s, so too was free market economic theory, lest one be labeled a heretic or a communist. These theories of capitalism proved very useful, but a lot of their most avid proponents used them very hypocritically as they ran alongside a very draconian criminal justice system. Reagan's gubernatorial campaign ran ads, footage of violence with a voiceover saying, "Every day the jungle draws a little closer." Goldwater suggested that Stokely Carmichael should be sentenced to death for treason. So began the slow depriving of rights and livelihoods of generations of black men. But racial capitalism was as durable as it was weak. Every administration since Nixon has had a version of black capitalism. The Ford administration changes it to minority enterprise. Ford says black capitalism is not a civil rights program or a jobs program, it's a business program. This is not an apology, it's a boast. Carter increased government purchases. President Reagan, of course, sharpened the weapon of free market capitalism against government. He claimed that the best way to fight racial inequality was to oppose welfare, minimum wages, and tax cuts. So it was an economic bill of rights. He said that minority business development is the key to black economic progress. So black initiatives slowly, which began as a neutralizing response to one of the biggest racial uprisings in history, were soon programs reduced to congratulating a few black businessmen. And what got added is other sort of minorities and female entrepreneurs. So Carter and Reagan included women in the SBA and MDBA programs. They changed the name. The theory of black enterprise was no longer discussed as an anti-poverty measure, nor was it about black power. It was about sort of diversity, representation, all of which are great motives, but not what was the purpose of these programs. So Clinton cut welfare, decrying a culture of independence, and declared that minority businesses would prove that we can bring the benefits of free enterprise to every neighborhood in America. All free enterprise needed was a nudge from the tax code. So Clinton passes the CDFI program, which was modeled after Shore Bank, the country's most famous black bank, even though it was not really black-owned. Shore Bank's motto is, "Let's change the world," and it has a threefold mission. First, profitability. Second, community development impact. And third, an environmental return. This is where Muhammad Yunus goes to be inspired to create Grameen International nationwide. So maybe I'll real quick show this.
Muhammad Yunus had brought a lot of attention to microfinance and got a Nobel Prize. Tell me, when you look at it, how effective is it and how much is it spreading?
First, it is almost universally effective where it's done based on the same model that he and the other big givers in Bangladesh have used. That is where you realize you may be dealing with people who never have a balance sheet, but they have a good reputation in the community, you know they've got a skill, and there's clearly a market for what they want to do. In the early...
Stop it there. So Nixon had tried to induce white firms to voluntarily hire black employees and to give these, contracts, but Clinton promises profits. So as HUD Secretary Andrew Cuomo said, it's not about charity, it's about investment. Harvard professor Michael Porter wrote that the best way for the economy of the ghetto to improve it was through private for-profit initiatives and investment based on economic self-interest and genuine advantage. Businesses had to exploit the competitive advantage of inner cities. Lawrence Summers, Treasury Secretary, said minority banks were like niche venture capital firms that deploy their superior knowledge of an emerging market niche to invest and manage risk better than other investors. These banks were called market scouts. Never mind that black-owned banks had long been scouting these markets for profits. So as deregulation was creating profitable global monopolies, minorities were being told that to prosper they should focus small and local. Jeffersonianism still alive. The ghettos, now called enterprise zone, emerging market, untapped market. Trump just released an opportunity zone program. And the idea was that entrepreneurs would make profits and it would be win-win. So instead of capital, the ghetto would get entrepreneurs. And eventually the entrepreneurs do end up finding profits. They're called subprime loans. So I'm going to skip. So this infrastructure continues to today. This is Obama's promise, help bring businesses back. There is now a department in every banking agency, the Fed, OCC, Treasury, for minority banks, laws like FREA to Dodd-Frank, there are minority bank push, not to mention the CRA and the CDFI, which are the big ones. So this continues. This is Trump. And with the rhetoric of self-help. So I was at the Treasury Department during the Trump administration when the Treasury Secretary, Jack Lew, is asked about the racial wealth gap. And the event, by the way, was the Treasury naming a wing the Freedmen's Bank. Without any sense of irony. In fact, this would be the first time that the Treasury was linked with the Freedmen's Bank. So Jack Lew responded that yes, the racial wealth gap was a problem, but, and I quote, "A lot of people say they can't afford to save. I understand living on a paycheck. Income is really challenging. I experienced this at the beginning of my career, and I know it's hard. By the same token, most people buy a cup of coffee without thinking about it. Most people buy an extra magazine or video without thinking about it. If you take the accumulated decisions people make lightly, and on one of these occasions say, I'm going to put my money away for retirement, you'd see people start with more. I think financial education, financial literacy is about understanding that some people buying a home might not be a good idea. Coffee and magazines. Meanwhile, the financial crisis wiped out 53% of the wealth of the black community, mostly through subprime loans, which were disproportionately given to black borrowers. By 2009, 35% of black families had zero to negative wealth. Rory Van Loo and Pamela Fooey have done excellent work on disparities in bankruptcy filings of these families, racial disparities. Former Congressman Brad Miller called the crisis an extinction-level event for black communities. This was made possible, of course, by theories of free market fundamentalism being applied to banking regulation. So while the administrative state deregulated markets with one hand, creating behemoth financial oligopolies, with the other they offered the powerless and the disenfranchised microfinance and financial education. So the idea, again, we were reviving Carl Polanyi, but there's a quote. So the ideas industry, led by the Chicago School neoliberals and expounded by Greenspan, Friedman, and the Olin Foundation's Law and Econ takeover, all pushed the idea that banking law and monetary policy was the domain of technocrats with models, that money was this fixed universal substance like Plato's theory of forms, as opposed to just a legal form created by a government. The theory is that monetary policy was akin to an equation that could be solved rather than a decision to be made. This takes an absurd form when libertarians start proposing Bitcoin as better than money. Goes back to the black box discussion we had yesterday with Eric and Anna. That the laws of the market could be measured and observed like the laws of nature. So if you brought up inequality or racism or any social consideration, it was because you didn't understand how markets work. Morality, public duty, social responsibility, justice, those were all nice, but had nothing to do with markets. Legal academics, our field, especially in the business and banking law, began talking like economists and apologizing for not being economists. And this has a lot to do with the Olin Law and Econ takeover of law schools. Instead of talking about democracy, power, and law, they spoke the language of law and econ, or if especially liberal, sometimes just behavioral economics. Obviously, there are exceptions in the room: Bob, Saleh, Christine, all the legal people here. The demise of the New Deal regulations created powerful and profitable banks, but that was the point. Deregulation was not just about removing restrictions. It changed the way policymakers talk about banks and money. The government's focus changed from a paramount objective of keeping banks small, powerless, and democratic, which was Jeffersonian, to ensuring that banks stayed profitable and efficient. Read Saleh Amarova's The Quiet Metamorphosis to understand exactly how this worked. Banks were relieved of public obligations. Their only obligation was to manage risk, but they didn't. And when it came time for free markets to do their things, which is market discipline, the government lost its nerve. And I'm going to wrap up right now. The financial crisis revealed that the deal had been lopsided. The government had waived the restrictions, but was holding the bag when the banks failed. If anything, the central bank is now more involved and holding more assets in the banking sector than ever before. So surely, if the government creates guarantees and subsidizes credit markets, that must mean that banks cannot exclude a significant portion of the public from the bounty of government support or actively exploit vulnerable populations. And so the problems of payday lending, debt, fraud, redlining, the racial wealth gap are more than just market problems. They're social and political problems. Money and credit policy must have an active role. And so I was going to march through, I don't have time, how from Jackson to Jefferson, they were wrong. I mean, William Jennings Bryan was perhaps being dramatic that the common people were being hung by a cross of gold. But could we not make the claim today that the 98% is being harmed by the Fed's monetary policy decision to use QE to purchase mortgage-backed securities instead of, say, modifying mortgage loans or maybe funding Title I schools? Brandeis, calling banks a public utility, but because they were using other people's money, perhaps now they're not, as Morgan and others demonstrated, they are using money created by the central bank. So the question now, and I'm going to finish, it's went longer than I thought. The question is, how do we fix it? We have to stop watching It's a Wonderful Life. For the last 200 years, the answer has been community banking, minority banking, begging big banks to lend through carrots and sticks, or just not buying lattes. But it hasn't worked, and banks have just not been interested. So it's time to drop the theory that private banks are necessarily intermediaries. We need a public option, and many here have proposed many good proposals. Morgan and John and Lev talked about the Fed accounts. Saleh and Bob have done amazing work showing that banks are public franchise. Derek Hamilton has talked about baby bonds and jobs guarantee. MMT, the positive money people. Mike Konsal, William Greider. Lots of people have very good ideas here. I've just proposed a 21st Century Homestead Act with Federal Reserve financing that would target the racial wealth gap. So we have to shed the destructive myth that capitalism will fix what public policy created. We cannot deflect the responsibility of economic equality onto these communities alone. W.E. Du Bois declared in 1948 that the great problem of American democracy was that it had not yet been tried. So perhaps it's time to try.
Thank you so much. We heard yesterday about payment systems, and for instance, PayPal sort of holds up its mission as sort of financial inclusion and democratizing access. What's been the track record of fintech companies, and are there opportunities maybe to fold them in as well?
Thank you. I mean, poor, and this is another one of those myths, right? It's really bad. And this is I go into this in the first book. This fintech bias that the Treasury is all bound up in fintech. So if you try to say, hey, postal banking, right, brick and mortar, the poor live in cash. If you're unbanked, you don't have a bank account, right? And all of the fintech providers, PayPal and Square, all of them, Venmo, operate on a bank account, right? So I talked to Jack Morsey about financial inclusion. He's like, oh, Square, we don't use a bank. I'm like, yes, you do. I know the bank that you're using, right? So they're using this loophole, this ILC in Utah, to plug into the banking charter. So they're getting around banking laws, and then they're saying, oh, we're going to disrupt banks. But it's not a solution to the poor. Fintech is this who said it was like this bourgeois solution, right? It's basically like, what would I want if I were poor? And the imagination goes to it's just me with everything I have, but just less money. But that's not what poverty is, right? Poverty is a fundamentally different thing. It's not just me with less money. It's a different world. And that's what fintech people don't quite understand, I think. And that's generalizing. I'm sure there's some good people.
Hi, I really liked the picture you had of the money cycling among the white people banks, and then like the just it siphoning out of the black banking sector. And what it reminded me of was yesterday when we were talking about when Rana was talking about money kind of in this loop in the financial sector and just kind of getting stuck there. And I was like, well, this looks like exactly the same thing as we were talking about yesterday. And I'm wondering, like, to what extent have you explored the problems with black capitalism as being like a microcosm of some of the problems with larger capitalism in the financial sector?
I haven't, but that's a really good question. And there's so much more work to be done here. I mean, honestly, when I was writing this book, I just wanted to read a book about black banking. And so I asked my library, just find me a book on black banking. And there was like nothing. The last one was 1930, right? So I had to spend time in the Nixon archives looking at this black capitalism. Someone should have written that book that is a historian. Like, I am pretending, right? So there's a lot of work, like for you PhDs that are historians or economists, to do more work that then we law people can cite. I'm not capable of doing that kind of work, but I would love to cite any of you who want to go deeper into this and theorize it or dig up some of the dirt.